listening to the Daily Gold Podcast, covering precious metals, the junior mining sector, and global capital markets for intelligent investors. Now, here is your host, Jordan Roy-Byrne.
Hey, everybody. Welcome back to another episode of the Daily Gold Podcast. Thank you so much for joining us today. And with me is another first-time guest. I'm so excited to get this gentleman on the program. His name is Gary Tanashian. He writes at Notes from the Rabbit Hole. That's the name of his newsletter. And guys, let me give you a quick intro on Gary. I've been following his work for I'd say almost 15 years. And he has been absolutely, without a doubt, one of the top gold macro guys, understanding what's really going on, what drives gold. And in addition to that, his market timing, buying and selling, knowing when to do those things with precious metals and the gold stocks specifically, it's really been outstanding. I've probably asked him a couple times in the last 5-10 years or so, hey, you want to do a podcast? He's never been interested. But I'm glad I could finally nail him down today. I'm really excited to do this. Gary, thank you so much for coming on. And how are you doing today?
Doing well, Jordan. Thank you. And hi, folks. How are you?
So, Gary, we talked a lot before we started recording. And I guess first things first, can you please share your macro fundamental construct for gold and precious metals and how you look at them? And I think the key is counter-cyclical. I mean, that stands out in your writings. You have to remind people, look, gold is counter-cyclical. When things are working, the economy's growing, stocks are going up. That's not when gold's going to do a moonshot. That's always important to remind people of that. Aside from that, I want to give away your analysis before I ask you about it. But in the context of gold being counter-cyclical, can you explain, how you see gold's fundamentals and the construct that you use, and maybe secondarily, what the fundamental setup is for right now for gold?
Well, first of all, I think that inflation gets in the way, the inflation narrative, and as soon as you see inflation out there, think gold, because everybody knows gold is for inflation, right? Unfortunately, inflation on the last few cycles has eventually worked positively for the economy, which means the cycle. Gold is counter-cyclical. And so at those times, even if it is rising, cyclical commodities, cyclical markets, they rise in relation to gold. And there's no amount of, bitching and moaning about that is going to change the fact that investor psychology is just going with the path of least resistance. And that is cyclical items that are working with the economy. And, how can I put this? Gold it goes up over the very long term. It's inflation sensitive over the very long term, but in those phases, it's kicked to the curb. Who needs gold? Who wants it? Why would you want it when my cloud stocks are going up, or more cyclical items like materials companies and industrials are going up? It's a psychological thing, and there's a time for gold, and that time is when everything else is starting to roll over, when it's declining in relation to gold. And then you can look at gold mining, which pretty much leverages, it leverages gold's outperformance to the upside. And so during the bearish times, when gold is underperforming, even if it's okay in nominal terms, when gold is underperforming other assets that are going up, gold mining margins tend to get flattened. And they're not the greatest businesses in the world to begin with, so they've always got that going against them.
Right. And so give us a little bit on how you see gold's fundamentals right now. I mean, because you're talking about when general things roll over, and it looks like we could be in that process of that happening. I guess secondarily, I mean, I like to ask too many questions, but at first with the inflation, gold wasn't going up, and now we thought inflation was going to roll over. It's not rolling over, but now gold is going up and outperforming. I mean, that's because the market presumably is discounting the economy rolling over, or the negative sides of the inflation rather than the positive sides. Right. Is that fair to say?
Perfectly said. So, you can call it stagflation, von Mises crack up boom. I call it hellflation. I mean, at some point, the inflation starts eating the economy. And that's when gold would be a positive, because, not all assets are going to keep rising despite the inflation. And the inflation is now, it's not backed by the Fed anymore. I mean, the Fed created it, birthed it, nurtured it, and now it's trying to put that genie back in the bottle because it's destroying it's eating away at aspects of the economy. And so to me, gold is the commodity that's left in that, other than, you have a geopolitically driven oil situation and all that. And some of those wild cards could still be detrimental to gold mining, since oil is a cost input for mining, a major cost input. But generally, when things turn bad, to put it simply, that's when it gets good for the counter-cyclical sector. We need positive assets to be rolling over, as they should, since I think that the whole cycle was man-made, policy-made, and unless they've repealed the laws of economics, then that always goes back in the form of a bust, in the boom-bust continuum we have here. It's a complicated thing, but it's like it's its own organism. It kind of lives and dies according to the rules and inputs that it has, which is policy. We watched it in real time. We watched them just manufacture the inflation in 2020. Now we've seen the effects. It was the good inflation coming out of 2020 into 2021. And then it's slowly morphing itself into the bad inflation. Interest rates are like picking up on that. And they're realistically not nearly as high as they need to be, but I have a feeling that that's going to be the mechanism that turns things back down. The bond market is right at its limit. And I think we're at a turning point. Either that or we're going full crack up boom. And I don't think that's what's in the near term.
And so let me take that and talk about technicals with you, because you do a really good job with your technical analysis. I mean, I'm a stickler for TA, and I can tell you there's a lot of stuff out there that's just not good. But you actually know what you're doing with your charts. You're able to read trends and patterns. And, looking at the chart of gold, I mean, this is one of the best technical setups I've ever seen. I mean, obviously, I'm not, 80 years old, a 60-year market veteran like somebody on King World News, but I have been looking at charts for over 20 years. And, to me, this is one of the best setups I've ever seen as far as a chart. And so, Gary, maybe that's just telling us it doesn't matter if we get full-blown crack-up boom or everything rolls over.
I think there's truth in that chart, with the understanding that it's really it's black art. But, that gold made its new high in 2020 amid all that hysteria, amid Buffett buys a gold stock and the usual touts trumpeting that. It made the top that week, and it needed to make a handle on this, multi-year cup. And TA is just one aspect of how to look at the markets, or at least how I look at it. but I'd much rather have my TA agreeing with if the macro does turn positive for gold, as it looks like it is at this time. I want to see a chart that's speaking the same language. And so we spent a year and a half building that handle downward. So it was a correction, but it was a beautiful bullish handle required to let's say tamp down gold bug spirits and get things back in order sentiment wise. And now this month we're starting to break the handle, or actually I'm not sure how many weeks it's been, but it made a move above the handle, broke out, pulled back, and now it's back up again. And there could be some real serious upside on the thing. Our target has, since calling for a correction back in mid 2020, the target is 3,000 plus. I don't have a timeline on it, but it's probably not going to be more than 2 years. So it's just a bullish technical situation, and the macro is showing signs, in some of the gold ratios and whatnot. It's showing signs, and I tend to be kind of patient, keep my pom-pom stored in the closet, and just gauge it week by week. But I'm pretty positive.
Yeah, and another positive development for me, I don't know what you think, Gary, but the gold miners are outperforming gold, and even the silver stocks are outperforming silver. I mean, I haven't seen this kind of outperformance from the gold mining sector in years and years. It's been years and years. I mean, that's obviously a really, really bullish development. I mean, do you agree, or do you have any different or additional insights with respect to the stocks outperforming the metals now?
Well, I'm just pulling up the chart as we speak. Yep, there it is. So I either mentioned it in NFTRH or at the website recently, just as a sort of a minor, I think it was an update at the website, where just a snapshot that through all the recent volatility, HUI gold ratio is still rising. It's been rising right out of early February, and there's no sign of any interruption in that trend. So, yeah, to answer your question, it's a lot better to have that wind at our back than to be looking higher in the nominal charts and having gold stocks underperforming with gold. So this is still a nice recovery, and I'm going to take a look at a weekly chart here. Yeah. Could be breaking trend even on the big picture. It came out of a W bottom on the ratio, and seems to have its eyes on the 2020 high, which is a theme for the whole sector as things stand right now. And that 2020 high is just a gateway to higher levels.
And I want to get your thoughts on silver, because the macro, you focus so much on how gold is performing against everything, and that's important. And, silver has been, it's been lagging gold forever, let's be honest. But even recently, I mean, to me, looking at the technical, silver has a lot of resistance, 27, 28, 29. That area, gold has less overhead resistance. And so that, for me, that's one reason why I think gold is going to continue to outperform, at least for a little while. I mean, how does silver, this is where I don't always have a ready-made answer. I mean, if we're in this situation that's really bullish for gold, but it's more bullish for gold than silver, silver is partly an industrial metal. So how does silver factor into a bull market in gold? I mean, does it depend what's driving gold up? Or, I mean, is gold eventually just going to pull silver higher because speculation and people will get excited, so they'll go into silver in the juniors? I mean, how do you analyze silver in this environment?
Silver bugs getting excited, Jordan? Come on. Yeah, well, I've been looking at the relationship between those two, and here I'll credit Bob Hoy with the with the term metallic credit spread. So within the precious metals, there's that one that's part precious, to me more industrially utilized, and the other one that is a pure monetary metal. I mean, I don't care about jewelry or the small amounts of gold used in industry. It's a monetary asset. And I've just been keeping an eye on the silver gold ratio, along with a few other indicators that are negatively divergent to the inflation hysteria we have out there right now. So honestly, I look at silver more as an indicator in its relationship with gold rather than trying to make sense out of the metal itself. Technically, it doesn't look bad. Nominal silver, it's sloppy. Gold has been like really neat, and it has painted a picture for me that maybe it's too easy for me to interpret it bullishly, but it is what it is, you know. Silver's weekly chart is messy. Its monthly chart is kind of strange, but looking at a daily now, and it's breaking out of a flag. I mean, it took a good spike rally into early March, pulled back in 3 waves, touched the 200-day moving average, and now it's breaking up out of that flag. So, and there's some volume there too. MACD triggering up, RSI positive. The chart geek in me is coming out, and I like what I see in silver. So it could be heading for that gateway up there at 29 to 31, which is the real proving ground for silver as to where it could eventually go. If it gets through there, we're looking at 50 probably, you know, pretty easily over time. Although with silver, it doesn't necessarily need time, given the momentum that hits that metal sometimes.
So as an indicator, if silver starts outperforming gold, what would that be indicating to you? I mean, was that indicating something economically, or is it more speculation in precious metals?
Could be both. Primarily, if silver starts outperforming gold, I'd marry that with another indicator, which is the CDNX, the TSXV junior index in Canada, in relation to the senior TSX, which, you know, I've got a chart that shows that over history, commodities follow the ratio between those two. And so far, silver, gold, and CDNX, TSX have been negatively diverging the inflation trades. And there's 2 scenarios there that those divergences are indicating that there's going to be a failure imminently in the inflationary operations going on now, or there's going to be a final catch-up move in speculative activity, because lately both of these are, I'm not sure about the silver-gold ratio, but CDNX, TSX is at least on a rally. And so we're charting that in updates as well to just keep tabs on it. It's either going to fail and go back down, or it's going to keep going up. Took out the 50-day moving average yesterday, or last week, I should say. If that continues, there could be a final burst of glory here for the most speculative ends of the inflation trades, centering on the V up there in Canada. But I'm taking a look at silver gold right now. I just want to, it's flatlining, going nowhere, but it's not broken down further either. So it's lurking. And I would advise keeping an eye on those 2 ratios to see if they indicate further inflation. And to answer your question, that's primarily why I use silver with gold. The interpretation is whether it's inflationary or anti-inflationary, cyclical, counter-cyclical. Because let's face it, our cycles these days, what are they manufactured by? What are they driven by? Money printing policy. So that's where the inflation comes from. And now we'll see if there's going to be a new leg of it, or I'm not saying a new leg of printing. The Fed's trying to put it all back in the box, but a new leg of the animal spirits they released a year and a half ago.
Yeah. So another question I have for you is, how do you see the coming bear market and recession playing out? I mean, maybe it's a little presumptuous of me. I mean, I don't think so. I think it's going to happen. How do you see that playing out with respect to the precious metal cycle? Because I think about, I mean, you mentioned the 2000 to 2002 cycle, and, gold moved counter, and then it even continued to move in the years after that. But you also have the early 70s and that period where gold was completely counter to the stock market. And then when the stock market bottomed, gold went into its famous 75 to 76, 45% correction. So that maybe I'm getting way ahead of myself, but that's something I'm thinking about. If gold is lining up here to perform well during the downturn, what is that, how long could that move potentially last? I mean, what does that mean for, what does that mean for a future development, the economy bottoming that, would potentially be negative for gold?
Yes, it would. But who says the economy is going to bottom anytime soon? And bottoming and then turning up in a brand spanking new inflation phase, we're far from that, right? We're not in Kansas anymore. The Fed is, they move fast now, but, the Fed has finally become aware that they screwed up. They put the pedal to the metal for a little too long, and they're in mop-up mode. And, much higher in the 30-year bond yield, 10-year yields, much higher in other inflation signals. And the gig is up for them as a respectable entity. Not that they're necessarily respected by people in the know, but the confidence of the public and whatnot. They did a panic move in early 2020, and now they're in a different kind of panic, trying to shove that thing back in its genie bottle. And I just don't think that we're going to have just a reasonable pullback, a cooling, and then a bottom in the economy, and then a new upturn. I think we're cycling down. I think certain sectors have been leading that way. Another thing I look at is the semiconductor sector. It's not as cyclical as it used to be, but it's still cyclical. It led this cycle up. It's an important one to watch, and it's been rolling over in its leadership. Various market leadership internals are rolling over. That said, we can play this kabuki dance for an extended period. I'm actually looking at some charts and reflecting, even on tech stocks. I see a pattern and I'm saying, could that be a nice W pattern or inverted head and shoulders? Could we actually tick new highs before a bear market starts? So everything's on the table, and it's hard to just quantify firm answers when the market is still in motion and hasn't made its decisions. But within the gold sector, I see things, you can only go by what you see, not by what you think might happen. And so far, gold is starting to outperform stocks in a firm way. Gold has made a little move versus commodities, but it still has further to go. We want to see counter-cyclical gold starting to really rise versus cyclical. In other words, economically positive commodities. We want to see the counter-cycle engage, and then I think gold, and especially the miners, are going to be fine because they leverage that when they're buying fuel and materials for cheaper prices, and when they're selling their product for higher prices relatively. So but it's a process, and I think too much out in the media is just cheerleading inflation, and because inflation, you should buy gold or gold stocks, or because deflation, this, that, and the other thing, and nothing is that simple, including the way I'm kind of raving on here, but there's more to actually discuss than can be put in a little sound package,
Right. Yeah, we could definitely continue this for a really long time. But on that note, Gary, let's end it for now here. But before I let you go, please tell our listeners where they can go to find your work and how they can subscribe.
It's all right at nftrh.com. N is in Nancy, F is in Frank, trh.com. A lot of public content there. If you go rummage around and check it out, see if it's for you. And Jordan, thank you very much for having me.
Oh, my pleasure, Gary. I'm a happy subscriber. Love your work. Thanks so much for doing this, and I hope we can have you back in the coming months.
Sure thing, Jordan. Thank you.
Thank you for tuning in to the Daily Gold Podcast. For more interviews, editorials, and analysis, log on to TheDailyGold.com. And for premium coverage of precious metals and the best junior mining companies, visit TheDailyGold.com/premium.